Hello, I'm Natalie MacDonald and you're watching Sydney Direct. Now, what is the connection between European growth forecasts and Australia's bond market? Well, my next guest, Janu Chan, economist at St George's Bank, is joining me on the show today to tell us exactly that. Janu Chan, thank you very much for taking the time to speak with us today. Much appreciate it.
No problem, Natalie. Glad to be here.
Okay, so firstly, the Australian bond market has been a little bit of a mixed bag of late. How would you characterise recent performance?
It has been a little bit mixed. At the shorter end, say 2 to 3 year bond yields, they've been relatively stable over the past few months, and that's largely because of the RBA's message of stability in interest rates, and that's kept bond yields at that end relatively unchanged. At the longer end though, bond yields have performed quite well, and we've seen yields in 10-year bonds fall. That's largely due to some international factors and concerns about the global growth outlook.
Walk us through then recent market response to those slashed growth targets from Europe. Is this an example of Australia benefiting from its safe haven status?
We did see bond yields fall in response to the growth forecast being slashed in Europe, but generally when we see concerns about global growth, we do tend to see bond yields fall, and that has occurred not only in Australia but also globally. There are, however, some factors which are supporting Australian bond yields more, and that's of course Australia's safe haven status and its AAA credit rating. Plus there's also a lot of liquidity in the global economy still. Even though the Fed has announced the end of QE, it still has its very large balance sheet in play, and also QE's just been ramped up in Japan, and there's a possibility that it could become more aggressive in Europe as well.
So are those some of the external factors then that domestic traders are taking into account, particularly then with Fed QE3 coming to a close as well?
Yeah, that has been a big focus for traders. The other thing that they're going to be looking forward to is when the Fed will start raising interest rates. That's going to be a big thing that they'll be looking at next year. The other thing that they'll probably be looking at is what the ECB will do, and whether they'll increase their stimulus efforts there. That's another big question that's for financial markets.
That's kind of external factors covered then. If we come in a little bit more domestically, how is steady RBA policy sort of for the mid to long term going to impact this sector?
It does mean that we'll probably see interest rates quite low for some time. That message of stability is really feeding into not much happening in the bond market, particularly at the shorter end of the curve. But at the same time, we do see that next year there is that growing possibility that the RBA could shift that stance and see greater evidence of the improving domestic economy.
Janu, thank you so much for taking the time to chat with us today. Really appreciate it.
No problem. Thanks for having me.
Our thanks there to Janu Chan of St George Bank, giving us plenty to think about there. That's all we've got time for right now. However, do stay tuned. The Dukascopy TV team and myself will be bringing you plenty more exclusive interviews from financial insiders. Goodbye for now.